Hey everyone, over the last few weeks and some change, we've noticed non-stop call buying in a number of Chinese stocks. In this video, we're going to cover a few trades in the sector that really struck us as unusual and aggressive. Now with that said, we'll start off with a deep dive on the first trade we're going to look at today on Up Fintech Holding Limited, ticker TIGR. On September 30th, we noticed large orders adding up to over 9,000 contracts, all transacted at the ask for an average fill price of $1.03 per contract and a total net premium of $927,000. One thing that's apparent in this series of orders is that this trader opened their position at nearly the high of the day for the stock. At the time of this fill here, TIGR traded at $5.85 per share, following a large gap up at market open from September 27th close of $4.55 to a September 30th open around $5.48. Opening their contracts near the high of day in the stock means they also paid roughly the high of day's worth of premiums. We can see here in the historical that the high of day for 9/30 was $1.15 per contract. And like I said, this trader filled at $1.03 per contract. Pretty dang close to the high, just $12 off. As the day progressed, the TIGR stock price backtraced the top of that gap's range, bottoming out at $5.22 per share. The value of the $6 call contract expiring on January 17th, 2025 dropped accordingly, reaching a low of about 60 cents per contract, a nearly 40% drop from this trader's entry. Now we can see here through the volume profile that no further substantial volume transacted into market close on September 30th, and the total volume on the day ended at 12,771 contracts. Then on October 1st here, we noted that over 11,000 of those contracts carried over. That confirms that we had a new position open and stay open into the next day. Stock moving into September 30th saw the TIGR stock price rise back up into that range of about $5.85 to $6 per share. And on the 1st, it rose even higher to reach a new high at about $6.28 per share. Our traders' contracts found themselves back into profit, reaching a contract high of $1.35. The real fireworks for this trader didn't come until October 2nd. Now, much like what we saw here on September 27th, going into the weekend before the trading session on September 30th, there was a large gap up into October 2nd. You can see that gap right here. From an October 1st close of around $6.21 per share, TIGR opened the trading session on October 2nd at around $7.71 per share, a $1.50 jump from the prior close. During market hours, TIGR hit a high of $8.63 per share. Now, naturally, that $6 call expiring in January of 2025 reflected this move. At its peak, the $6 call contract traded at $3.50 per contract, a nearly 240% gain from their entry at $1.03. To put this in monetary terms, this trader's original premium spent to open the position went from $927,000 to $3,150,000 in just 2 days. But as time carried on and October 1st and 3rd came to pass, this trader was able to see significantly more upside. On October 4th, that TIGR $6 call for 1/17/2025 hit a new high of $7.10 per contract. That marks a 589% gain from the original entry, bringing the total value of this position to $6,390,000 in just a few days. That brings the total profit margin of this position to $5,463,000. Now, we did see a little bit of evidence of potential exits at the end of the day on Friday, October 4th, with 1,000 contracts transacting at the bid at $6.50 per, and then another order of 400 at the bid, right at the high of day at $7.10. But we'll need to see this open interest update on Monday to confirm that positional closure. In addition to this, we noted additional unusual activity on the $13 contract expiring April 17th, 2025. First, here we saw 5,000 contracts at an average of $375 per contract. Just minutes later, we see another tab of about 2,500 contracts at $410 each, and another at $431 per contract, for a total of 10,000 contracts at an average price of $399 each. This trade is still open as well, and sitting at a little bit of a profit, hitting a high of $529 per contract on Friday, October 4th. But we'll need a little bit more time to see just exactly what happens with this. And the TIGR stock price doesn't really show any signs of slowing down. The next trade we'll take a look at happened on PDD Holdings, ticker PDD. PDD activity began back on September 24th when 19,048 contracts of the $115 call contract expiring on November 15th transacted ask size for an average price of $415. Of those 19,000 contracts, 9,144 of them carried over into open interest, again confirming a new position that stayed open. On the same day, around the same time of day, 15,000 volume of the $120 contract of the same expiration transacted, also ask side, for an average fill of $4 per contract. Both of these positions carried over into open interest, with no signs of an exit in the days that followed. Moving forward a few days, two more strikes on PDD got similar attention. First, the $135 call, with 11,000 contracts carrying over into open interest for an average fill of $4.72 per contract. Likewise, the $140 call contract saw nearly identical volume and open interest carryover. While these trades filled, the PDD stock price ranged between $108.84 on 9/24 and as high as $124.33 on 9/26. As the markets rolled into September 27th, PDD continued climbing. All the while, all four of these positions remained open with no signs of an exit matching the size of those original positions. On October 2nd, Pinduoduo reached a high of $155.19 per share, pulling every single one of these contracts deep in the money. By October 3rd, all four contracts had already paid off handsomely, with the lowest gain of these four contracts, the $135 call, hit a profitability of 417%, and the highest gain on the $115 call hit 888% gain. The $135 call and the $140 call showed some signs of a partial exit, and around 2,000 contracts of the $130 call transacted at the bid on October 2nd, with less than half of that carrying over into the open interest. The $115 call and the $120 call appear to still be open in full. As you can see here in the historical volume profile of the contract, there were no transactions with enough volume to indicate a closure. And here from the Unusual Whales inflows and outflows for ETFs, we can see that this frenzy wasn't specifically limited to options contracts. Looking at Chinese stock ETFs, FXI, Yin, and Yang, we can see across all three significant amounts of inflows, lots of buying for the entire month of October so far. Now, although we're only in the first part of October, these steep price increases definitely have me curious to see how things progress throughout the rest of the month. So all things said and done, all traders on the TIGR and the PDD contracts profited millions upon millions of dollars during the Chinese stock rally. And that's just so far. Now, there are a couple more honorable mentions I wanted to take a quick peek at. One of them was the BABA $116 call expiring on the 11th of October that went 171% overnight from $2 per contract to $5.43 per contract. And the other, and this one's a bit of a doozy, was the FXI, an ETF, the $27 call contract expiring on October 18th, which had an entry price of just 80 cents per contract. And by the time this trader exited on October 4th, you can see here, The initial volume on the 19th of September of nearly 12,000 contracts, now coming off at the bid for an average fill of $8.50 per contract. If we scale that to the amount of contracts that transacted and an entry price of 80 cents with that exit of $8.50, that's a 962% gain worth $9,696,385 in profit. This has been quite the wild week for Chinese stock investors, and I'm really curious to see where things go from here. Now that does it for me for this week's flow trade review on these Chinese stock names. I'll be back next week with another episode and another flow review. Take care, everybody.